So was I wrong? Did I waste 20 minutes of your time? Were those dealers that I said didn't know what they were talking about, were they in fact right? I'll be honest with you, I don't think they're right, but here's what I didn't consider when I made my first video.
What's up guys, welcome back to the channel. Thanks for clicking. If this is your first time here, I try to make videos on how to maximize your lifestyle independent of income. So I made a video on April 13th. I said Rolex prices were falling. Today's May 11th and prices have dipped a little bit, but I've seen them come back up. Here's some examples of what I'm talking about. Here's an example from back on April 13th. Black ceramic Daytona box and papers 18.5. Obviously a lot less than what the market value was at the time. Now the price is a lot closer to what the market commands at 21.6. Here's a black AP 44 millimeter carbon, I believe, 22 box and papers. Now it's up 22.5. Still a great deal. This one needs no introduction, 21.5. I believe that one's sold at this point. So is this one, Batman with the Jubilee bracelet, 13,000, great price. I've seen it lower, but this one's priced to move, and we've talked about Milgauss's on this channel. The blue one, the most coveted one, 68, great price. These both sold at this point, I believe. And then finally, this Yachtmaster one, I believe the price should be in the 21.5 range. 18.9, I believe this one is sold as well. And then some examples from watchcharts.com, what I showed last time. The Hulk from April 13th, 13.5. It's gone up slightly now, 13.540. Still a very high standard deviation. As we go back to the Pepsi, back on April 13th, it was 14.950. Now I'm showing trending 15.627 with that same tight trend line.
So was I wrong? Did I waste 20 minutes of your time? Were those dealers that I said didn't know what they were talking about, were they in fact right? I'll be honest with you, I don't think they're right, but here's what I didn't consider when I made my first video. Two things actually, two things I didn't consider. The first one being, when you list the $35,000 watch for 25 or 26, somebody's going to jump on it. These, as with other luxury goods, are emotional decisions. And so independent of what's going on in the economy, you see something you like, somebody's going to pull the trigger on it. I think a lot of that's been happening. And the second thing I didn't consider, yes, everyone is affected with what's going on right now, but some people's short-term effects aren't the same as other people's. They're not as drastic. They're still working. We're only 2 months into this thing right now. People with a little bit of disposable income, while their 401k might reflect it, still haven't personally felt the effects yet. Speaking of 401k, let's take a look at the stock market, which is something else I didn't consider when I made my first video April 13th. Check out the Dow Jones Industrial Average as of April 13th. Now, if I cover up everything after that and just show you this frame, you see that we reached our lowest point March 23rd. This was right around the time of social distancing. I remember because March 21st was my birthday, and that was the last weekend I was out. So from March 23rd to April 13th, yes, we did see an increase of over 20%. But just looking at this window, it's very hard to tell what the market's going to do after this. Obviously, if we open this window back up, April 13th to May 8th, the market's been somewhat steady and actually increasing slightly. Remember, all this time that the stock market was going up was some of the worst times in the economy. 25 to 30 million people laid off. Social distancing, can't go to restaurants, can't get out, can't spend money. Let's get back to the research. I want to show you this article from fortune.com. Notice the date, March 27th. March 27th is a few days after our current dip, and the market jumped a little bit more than 16% from our lowest point. This defines what a bear market is, a fall of more than 20% from stock market peaks, but then it defines what a bull market is. A bull market is a 20% advance off the prior low, and here's the kicker, that does not undercut within 6 months, with an emphasis on the latter point, on the 6 months. In other words, a bull market counts only if stocks don't dip back through late September. It then goes on to say that historically it's not unusual for stocks to plunge into a bear market and bounce back more than 20% thereafter. What is unusual is for this to end right here. During the financial crisis of 2008, the S&P rallied more than 20% off its November lows, only to catch another downdraft in February. So again, what this is saying is historically, we've dipped, recovered more than 20%, and then dipped again. Tentative bullish investors will be watching the market closely, not only to see if it falls further, but whether or not it can recover to old highs. I attribute this recent growth to the mix of government programs, including the stimulus packages. So let me summarize what I just read. Economically speaking, we've been here before. We've dipped significantly, we've risen after that dip, and then in 2008, we dipped again. So what does that mean right now? By definition, we are in a state of economic uncertainty. That's why there's a 6-month time period built into the definition of a recovery. Let's get back to the research. If we look at the outlook from a recent article from Focus Economics dated May 5th, these panelists, focusing on the social distancing variable that we didn't have in 2008, see our GDP contracting 5.4% for 2020 before growing 5.1% in 2021. These are with the government stimulus packages. I double checked these numbers, and another website, tradingeconomics.com, show about the same thing from 2019 to 2020. Not the best news, right? So let's talk about what I want to happen and what I think is going to happen. What I want to happen. I want the stock market to continue with this upward trajectory. I want to get back to work. I don't give a shit about watch prices. Watch prices will probably go up if that happens also. But I would prefer the economy to get back to normal. Now, what do I think is going to happen? This is strictly going to be Lewis's opinion. I'm not citing any references here, but we are in uncharted territory. We're tired of being at home. We've been at home for over 6 weeks, and we're being overly optimistic. I don't know if opening up is going to be sustainable. But again, just my opinion. But the fact is, by all indications, factoring economic metrics and social realities, we are in a worse position than we were in 2008. So with that said, why would we not expect a bear market rally like in 2008? Okay, getting outside of economics right now. Do you buy a watch with that said? I go back to my advice, buy what you like. If it's not for investment, it doesn't matter, right? I get it. But if you did want to buy right now, what I see is the prices of the hyped pieces continuing to be high. If you like something like a Yachtmaster, I think there's some great deals on it right now. You have to look though. Also, I see some deals on some high-end non-hype pieces. Let me show you what I'm talking about. So I started doing some research on this Patek. It's an annual calendar, white gold, and it's got that beautiful blue dial. The brown leather strap, I think that matches it perfectly. Here it is on Chrono 24, and guys, you know my feeling on Chrono 24. But regardless, everything is in the 49, 50, high 50 range, except for a couple, right? Here's one for 43, here's one for 42.9. I've already contacted the seller, a reputable seller willing to deal, and it's a great price. Again, just started doing my research on it. I'm not saying I'm dropping this kind of money right now. Here's another one. This is a Longa. This one's a perpetual calendar, right? The difference between annual and perpetual is perpetual. You don't have to mess with it in February either. It adjusts for leap year. Anywhere from mid 60s, 50s, 60s again, mid 40s, and then a couple ones in China that I'm not going to mess with. This one's 42.9. And actually, again, I already talked to the seller. He already lowered the price to around 41. Look at this thing. Look at the back of this thing. Absolutely gorgeous. Again, I'm not saying I'm dropping this kind of money right now, but the prices are fantastic, especially considering retail. This one's like 97. Some pretty cool pieces right there, right? I know. Guys, I'm going to wrap up the video. I appreciate you watching. If you got any value out of it, do me a favor. Hit that like button, subscribe to the channel, leave a comment down below if you don't mind. Just say you liked it or you didn't like it or whatever. I read all the comments. I get a lot of feedback out of it and I appreciate it. With that, thanks again for watching and I'll see you guys next time.